Hey, Dan, can you help him out, please? He looks like he needs help. Let's get this show on the road. What's up, everybody, and welcome to the LV Home Expert Radio Show every Wednesday at 5 p.m. Pacific Standard Time. We are now back and live. That's right, back and live. And I got my man, Dan French, Las Vegas lender. What's up, Dan?
Rob. Can you hear me now?
Oh, I can hear you now. I forgot to turn on your mic.
Can't hear you.
You can't hear me?
No.
Why? It's because nobody's ever sitting over here.
Oh, is your mic not on?
Yeah, it should be.
Oh, you know what it is?
Nobody's sitting over here
exactly.
all the time.
I always put you on
up.
number 2. I did turn you up. I actually turned up number 2, but it was actually David. How's everything going, dude?
Dude, good.
Yeah?
Loving life, man. Dude, it's so hot right now. Mm-hmm. You can fry an egg on the sidewalk. I'm telling you, I got air conditioning full blast, and when you step out of that car, you're literally sweating.
I know. I think, was today the first day where it hit 100 degrees?
Yeah.
I think it's the second day.
The second day?
Yeah, is my mic on?
Yeah, now it is. I was gonna actually introduce him slowly, but I guess that didn't work out.
Everybody knows who David is, man.
Of course. How's everything going, David?
Going pretty good, pretty good. Excited, man. June 1st, Vegas opening 100% capacity.
I know. Moratorium this week just passed. So there's no more guidelines for that. But according to the CDC, until the end of the month. So we're going to see how that pans out with all these rental properties, right? So if you start evicting some of these people, what do you think?
Yeah, I mean, we'll see what happens. I mean, you know, maybe these people have a lot of, they got a plan, you know, to get out of that property, or they've been planning to get out of it. So we'll see what happens. I'm curious to see what the numbers will be.
Yeah.
So, you know, we talk about this all the time, David, moratorium. Is there really going to be a lot of foreclosures from it, from people that have properties? You really think there's going to be a lot of people with that, or evictions?
Well, I was watching this one video, and the data came from something night group, Black Knight, and they were saying that there were over about 12 million, right, homes right now that are in delinquent. 12 million across the country.
That's not a big number, though.
You know what? They're talking like it's a big number, but I mean, our population's about 360 million. But then if we take a look at 360 million, how many of those people actually own homes? Do you see what I'm saying?
Yeah, I mean, to me, I think it's just news, and it's a good talking point. Is it a serious issue maybe in Las Vegas? Maybe I think, you know, location might be a big problem, but I don't know. I mean, it just doesn't, to me, it doesn't seem that people are really like, you're not seeing the effects yet. And I know it just started where we just got really, but I'm not seeing anything out there.
I don't think we're going to see it just yet. Now, The other thing is that when it comes to real estate, we have to take a look because we look at the macro level, but then real estate is also at a local level, right? The real estate industry, right? It plays a part or a different part through different countries, counties, and cities, right? So we have to take a look at a macro level. Here in Las Vegas, I mean, tourism is crazy off the hook right now. I think we're about to hit almost 3 million a month. Wow. 3 million a month. That's about 42 million people a year.
So we're back on track.
Basically, I've been going to the Strip lately, right? And it is bumper to bumper.
Exactly.
Like jam-packed, dude.
Yeah.
And I even went down to downtown Las Vegas, Fremont, which I probably want to go there again. It's, I don't know. I went there this week Saturday because I went to go watch a show, and we decided to walk Fremont Street. I felt like it was a little sketchy.
Really?
Yeah. You ever get like where just like so much people in one crowd, but there's so many things that are going on. I had to like keep checking my pockets to make sure nobody like picks my pockets. So I had to like put my phone in front of my pocket.
Oh, that jewelry you got?
Yeah. Man, this fake jewelry, dude.
All that bling?
Yeah, this is fake. Yeah, you want to rob me some fake jewelry? All right, you can have it. Hey, they're going to go home and test it and be like, man, this broke realtor.
Yeah, right.
I'll be like, gotcha.
You know you ain't wearing nothing fake that's gold, man.
Nah, man, it's all
Come
fake.
Come on, man.
It's fake.
You trying to kid. But so downtown was popping then.
Yeah, downtown was so busy. It was like bumper to bumper. I'm talking about I had to walk like this. And as soon as I walked in the crowd, first thing that came on was I'm wearing a mask.
Oh, yeah.
Just in case. You know what I mean?
It's kind of one of those things where you're like,
you don't have to.
You want to wear a mask just because it's so crowded. It's like,
dude, it was real crowded. Like, I'm talking about to the point where guys are like smoking. They would walk past me and they would like blow the smoke in my face. I was like, oh, man.
I think you have like the homeless people on one side. You got people smoking in your face on the other side.
And
I'd rather just wear a mask.
Hey, you know what's crazy down in Fremont, dude? Like, you ever seen those girls with those like banana titties and they got like tape around them? They were like having like all of that. Like, dude, it was just kind of like, it was just a crazy vibe out there. People are like drunk. I mean, you did have some homeless, but for me, I just felt a little bit too sketchy. I don't want to sound like I'm bougie, but you know what? A bougie boy, it is what it is. You know what I'm saying?
Is it just the crowd? Like the crowd just gave you a wrong vibe.
Yeah, you know how like the environment, like you could just tell, like, man, if something happens, like, all war is about to break loose. That's how I felt.
I think it's also like we're not used to it, right?
Yeah.
It's been over a year and a half.
Yeah.
And we're not used to crowds like that in Vegas. And all of a sudden this weekend, we just exploded.
Yeah.
California is crazy.
It seems like as I get more older, I get more wiser, and I start to become more of like a scaredy cat, dude.
I think you're just more aware.
Yeah.
And I think you become where you're not as invincible.
Yeah.
You know, like when you start getting in older years, it's like, you know, you think like you don't think of stuff like this. Now you're thinking about what everything that could happen or may happen.
Yeah.
And you're like, I think that's what's going down there. You're like, I'm aware of the surroundings. I'm aware of this person. I'm aware of what's happening. So I don't know. To me, I think you just become.
It's almost like a sixth sense, right?
Yeah.
Or something.
It's
you start thinking like 50 steps ahead, and what are the consequences, right?
Correct.
Yeah, exactly.
If I get jacked, if this happens, this and that, now you can see the perspective like 50 steps ahead.
And then you're saying, do I want to put myself in that
position? Yeah, exactly.
Right? Is it worth it to me?
Yeah. You start running all the odds in your head. Like, what are the odds if this happens?
Talking about that, we were walking towards the end of Fremont Street, right? Mm-hmm. I see this guy. I can tell he was drunk, and he was like laying down like halfway on the floor and propped up. And I seen him, and I walked around him, but the family decided, hey, let's go around the other way because we wanted to cross the street, but it was so busy. So I happened to turn around, and I end up kicking this guy's foot on accident. And he looks at me, and he's calling me out. And I go, sir, I'm sorry. I didn't mean it. That was on accident.
Oh, he's trying to fight you.
At this point, he's trying to fight me, dude.
Was he wearing Jordans or something? You step on his Jordans?
Oh, no. I think he was like a homeless guy.
Yeah.
And I think he was already to the point where he was drunk because he had like a bottle of liquor, but it was gone. But it almost seemed like his soul was gone. Like, and no matter how much I told him I'm sorry, it was on accident. This dude wanted to fight me. And he started calling me all kind of names.
Yeah.
And I was like, look, I'm trying to de-escalate the problem, right? Because obviously I don't know how to fight. I look like I do. That's all I got. I'll give you one of these. And that's it, you know? So I'm walking away, but I felt like I had to like look over my back just in case, like, I didn't want the guy to run up on me and hit me over the head with a bottle of Jim Beam, you know what I mean? But that's kind of the environment was. It was just so weird, dude. I couldn't handle it. I was like, babe, we got to get out of here.
What were you going to say, David?
No, I had a similar experience. So I actually went to go see a comedy show as well at the Grand downtown.
Yeah.
Mm-hmm.
We had it's actually pretty cool because I have a membership for online. It's called House Seats.
Mm-hmm.
And what we do is we get tickets for that night if the show isn't sold out. So that there's a lot of prime shows on the Strip. And if they don't sell the shows out, they put them on the website so they can fill the seats. And those shows are starting to come back on the website. So that's pretty exciting. So there was a stand-up comedy show that came up. Went to go check it out. And kind of a similar experience to you. We saw the show. It was pretty hilarious. The guy was up there. And then after the show, we decided to walk Fremont Street. And it was just shoulder to shoulder. I mean, it was insane.
Oh, my gosh.
It was crazy.
I think it's one of those things, too, that if you cross somebody's path that has nothing to lose, that's not a good person to deal with.
Yeah.
Because they don't care about any consequences.
You never know what somebody else is going through.
I mean, look, they're
That's true.
all human beings. But, I mean, at the same time, it's like, they got nothing to lose, right? And you got everything to lose.
Yeah.
Right? You're out there, you got all this stuff going on, and what happens if something happens to you? So it's weird. It's different. I think, it's like you cross different paths, and it's like one of those things, You just
I'm just a sissy, man. Like back in my days when I was a kid, I'm like, man, you want to fight? Let's do it.
nah, man, you should have just threw up your arm and say, hey, man, let's have a handshake. You know what I mean? Let's just hang out and have a handshake.
What I should have said, I'll be back with my homies.
You should have said, I'll be back with a bottle of Beam, Jimmy. We'll drink together. That's what you should have said. Dude, he'd have been your best friend.
I
You going to
know.
get me a bottle? Man, you're my friend. You're my best friend now.
Oh my gosh, that's just.
You
so
should have brought
crazy.
him over to the show.
So let's talk about what's going on in the housing market throughout the country. There's a comment here from Project Design. He says about 75 million homes are owned in the U.S. 12 million is 17% delinquent. Not good. What are your thoughts about that? 17% of homes that are delinquent in today's market.
David?
So out of that 17%, how many are actually in the forbearance program, right? So we have people that are in negotiation with their bank. They call them up, say, you know what, we're in the middle of COVID, we're unemployed. Now we're going to be in the forbearance, and the bank is agreeing to that because it's a national, crisis that's going on. So I think about 15% out of those notice of defaults are actually in the works of negotiating with the bank so they can work something out. Mm-hmm. So, I mean, it's going to be hard to say how many of those homes are going to hit the market and help our inventory, because how many are going to get back to work, get back on track, negotiate with the bank, and what percentage of them are still going to be unemployed and not be able to pay their mortgage.
That's a good point.
And those are going to hit the market.
And if we take a look at that, are the banks even going to work with these people?
Well, I think you got to look at it too, though. Like, what is the percentage of foreclosures, let's say, in a normal market? Compare that to today's market. Is it really that much more drastic?
And what I want you to think about too as well is that I did some research a couple days ago, but I forgot the data. I think it was a total of 12 cities, right? Which 12 cities will actually go into foreclosures? Because certain cities, remember, we talked about this at a local level. Certain cities that you look at, or certain counties, right? What is their main sector? Some of them may be up to 75%, right? Rentals. Those are the ones that are going to get hurt the most. So you need to take a look at your county, your city, to see exactly how many rentals are in your city, because the primary sector, like, you can go to one city or one state. Once that company is gone, they leave out of that city, then you have all these homes that were rentals that are 75%, 60%. What's going to happen to those cities in those marketplaces, right?
And I think the biggest factor is we call them the one property investors, right?
Yeah.
It's the people that they own a primary home.
Yeah.
And they want to get into real estate investing, so they end up buying another property, right, as an investment.
Yeah.
And that's their first property that they're investing in. What ends up happening is they rent that to family or friends, usually, because that's normally what happens when they have their first property. That normally doesn't pan out very well, right? When you rent out to a family and friends, they start to go delinquent, or they don't pay on time, and you don't have a contract in place, and a lot of things can happen. I believe those investors are going to be the first ones to put the property on the market, because they're pretty much tired of being landlords at that point, and they're just ready to liquidate and get the equity out of the property. At that point. So,
and also what I realize is pretty crazy is that there's been a lot of news articles today where you have big investors, right, that are working directly with the builders, where they're actually buying city blocks. So you have just say a builder comes in, they're building 400 homes. You have a hedge fund company literally buying all those homes. Isn't that crazy? Mm-hmm. So now the question is, when they buy all these homes, obviously they're going to rent it out. And this just tells you that inflation is here, folks, right? Because think about it. If you have big investors that are buying homes today, especially at the value at the where they are right now, right? If they're buying those type of homes, right? They're renting it out. That means they're parking their money somewhere. Right. And they're trying to get some money because every asset class right now is so overinflated. So what happens is when you have companies like that, like the hedge funds that are buying these places, where do people like us, right? Where can we buy a home? We probably can't because it's overinflated in the price. So now what happens? Now we got to rent.
Well, I think too, you got rents and mortgages are somewhat kind of going up at the same trajectory, right? So you have a lot of things happening at the same levels where you see that happening. Now, I also think, though, you look at the moratorium and you look at what's happening with these rentals. Let's talk about the investment properties first. Let's say this, how many people do you really think buy an investment property in the last couple of years with this market as high as it is? I don't have a lot of people that come in and buy investment properties. Now, you go back 7-8 years. So are these people that own these properties that are investment properties, are their mortgages low where they can kind of put a Band-Aid on the bleeding, if you want to call it? Because, yes, you have people not paying mortgages, but we got to be honest, in this market, this is not an investment market. It hasn't been probably for the last 2 or 3 years.
It hasn't. And the reason why is because home pricing goes up so quickly. Rental rates have not kept up with the supply and demand. Mm-hmm. Rental rates are still low. That is very alarming because think about it. Rents should also be going up, consistent with the home pricing. But the inventory is so low, everybody's trying to get a brand new home, driving up the price. But the rental side hasn't even caught up to the mortgage. It doesn't even cover your mortgage.
But I can say this, it has kind of, that gap is shrunk because you look at where the rental market's at. Mm-hmm. You can't rent a property right now. It's the same with properties out there to buy.
But the pricing for the rentals haven't increased to the point where you can literally buy a home. The median price point for today across the Las Vegas Valley is $210 a square foot. Average days on the market, 6 days. $395,000. 2 weeks ago, we had a full conversation, $380,000. 2 weeks before that, $360,000. We are now here at $395,000, which is already 1, 2, 3, 4, 5, 6, 7, 8 times the income here in this state. Average days, 6 days on the market. Okay, so now the question is, on a payment like that, right, the average person probably puts down 5% on a conventional because that's where everybody's at right now. How much is your mortgage payment on something like that, right? If we take a look at $395,000, what do you get across the board? 1,900 square feet, 3 bedrooms, 2.5 bathrooms, 2-car garage. Mm-hmm. Across the board. The question I have for you now is financing, 5%. What is today's current rate, roughly?
And say around 3%.
Okay, and what would my payment be? Obviously, at 5%, we have mortgage insurance premium, right? Okay. What do you think it's going to be?
You saying at 380, 385?
395.
395.
Let's say 400.
Let's just round it up. I'm going to say you're probably looking at a $2,500 to $2,700 payment.
$2,700 payment.
$2,500 to $2,700. Why? Because there's different taxes, people's credit score is different, insurance, things like that. So it really depends on your credit score. Sometimes if you need mortgage insurance, that's a direct impact on what your credit score is too. It's not just your interest rate. So that will impact your payment.
I think the number one factor that we're looking at is the cap rate. Mm-hmm. So the one thing that we always give our clients advice is you want to buy a property is to get the best cap rate, right? So in case worst case scenario, you have to rent the property, you're always going to be okay to cover the mortgage. And like Chuck was saying, that gap has shrunk down because the rents have not kept up with the values of the homes. And what we're seeing is the cap rates are getting smaller and smaller. So like you said, I don't know if investors are going other places. There's other places like Texas with fourplexes.
Has to be, right?
A lot more multi-units.
Yeah.
Where they can invest out there and have a higher cap rate. But as of right now, the values are increasing a lot quicker than the rental income.
The crazy part about it is even the 4 units, right? It doesn't even make sense. They want almost $150,000 per door. And if you put down 20% on that, it just doesn't make any sense. Like, you're not even breaking even. That's like, who would buy that? Do you see what I'm saying?
Right.
And those are in like D-class neighborhoods. You won't get a fourplex in today's market in an A-class neighborhood. But I'm not going to get into that today. What is A, B, or C? However, let's take a look at this. For 1,900 square feet, we talked about $395,000, right, on a home. What is your monthly payment, you said?
Say 25 to 2,700.
25 to 700.
No, 25 to 27.
Okay, 25 to 2,700. Check this out. If I went out to go rent a home across the board, 3 bedrooms, 2.5 bathrooms, 2-car garage, 1,500 square feet, the median right now, right? $1,700 a month. $1,700 a month versus 25, right? Mm-hmm. So that tells me it makes no sense to even buy an investment property.
Mm-hmm. Well, that's what I'm saying. And then you look at the moratorium. I mean, the investment side of it, you know, I don't think it's going to impact. Look, it impacts people that are renting and have investment properties, but it depends also when you bought your home. Like they're not buying right now. So I can't see that they're just terribly losing, you know, hand over fist, if you want to call it, right, to these investment properties. But you're looking at the fact that I still think that there's not going to be a ton of people that own these properties that they're going to have to suffer to sell potentially, because a lot of them, when did they buy? And you know, the big market here was 5-6 years ago. Yeah,
exactly. And so they probably have that equity cushion. However, the ones that can't make the payment because the tenant's been staying in there for over a year without making a payment, right? The landlord, he's probably bleeding. Even though that he's bleeding, what is he going to do? He'll probably just end up selling his home for an equity position, right?
Yeah.
And paying back the bank or recouping his money as soon as he can actually evict that person. Or the next option would be to actually sell the property with a tenant. And I'm actually running across that situation right now where I have a client that has a tenant in place, and he's actually a YouTube subscriber, so thank you. I do appreciate that. He has a tenant in place, and I think they're only paying like $900 a month when rent should be around minimum $1,600, right? And the property is destroyed. Okay? So, and he's really only making like a couple bucks every single month. It only takes one thing to go wrong, and there goes your investment. So the question is that actually an investment or is it a liability? Look, at this point, it's a liability. Even though that you're making $200 a month, it's still a liability. It's not an asset, because it takes that one thing to go wrong, and there goes your income off that property. And it makes no sense to leverage out your money to make $200 a month. Am I wrong?
No, I mean, you're right.
Exactly. And like you said, it could be like the AC goes out or the water heater or some major component in the property, and there goes an entire year of cash flow.
Yeah.
Just to make the repair on the AC. So that's a huge factor that, you know, we got to take a look at.
If you talk about, I want to flip that too, because I'm just going to kind of go off of the moratorium on the, let's say you're a home buyer or you're a homeowner.
Yeah.
You're living in the property. I have a couple case studies where there's a lot of people that are still working or did work out plans. It's very rare that I had somebody come across me and say that the bank wasn't willing to help them. There's some people that are on, you know, they did the forbearance where the total amount of payments were put to the back end of the loan. There's some that did a modification. I mean, there's different things, but I haven't had anybody come to me for the most part.
Yeah.
Now, that doesn't mean that banks are going to be a little bit stiff on it, but that have come to me and said, hey, they're not willing to work with me. So that's why I'm saying it's really dependent on what that buyer is going to do at that point, because they're not necessarily probably out of the woodworks as far as they just don't have any options. I'm doing refinances right now where people are under a modification or we're under the forbearance, and they're now out of the forbearance situation. And they're completely fine. So I don't know. It's going to be interesting to see.
Well,
that.
Now let me ask you this: does that also include the people that don't have a job? Because when you don't have a job and you go back to the bank and say, "Hey, can you push this off to the bank to the back of the loan?" Will the banks do it? And I've heard, you know, from the grapevines that friends that do have other clients like that in that situation, they will not do it.
I think it depends on timing too. Like right now, Vegas probably has 2 jobs for every unemployed person, and we don't know the total number of unemployment people, but there's a lot of unemployment people that are choosing to stay unemployed. There's a lot of jobs now, and I think the timing now, they might be not as forgiving. They might not.
Shit. Oh.
What just happened?
Intermission.
Hey, I was trying to bounce out to go get. Hey, see, this stuff is not as easy, right?
Hey, show it. No, but I mean, it goes back to, David, you know this too. I mean, you look at people have forbearance options. I have people that are trying to refinance their home. I got case studies, like I said, where you have a modification. Their payments half, but they're still not they're not putting themselves in a position where they can't recover from it. And it's going to be interesting to see those numbers because now, look, there's no excuses. But now there's less people working still, and there's more jobs that's out there and created. So is it just because you're choosing? Banks need to figure that part of it out.
Exactly. That's a really good point. It's about taking action. And a lot of people don't realize that they were still filing evictions even prior to the moratorium being over. So if they can file evictions for non-payment, they can file evictions for a certain amount of things, but not if there is a COVID situation in the household.
Right.
So that was the only stipulation that you couldn't file for the eviction. So people were still getting evicted in that process, and before the moratorium ended, and people didn't realize that.
How were they proving that? Is that because they just said, hey, you know what, we can prove your, like what makes somebody? They had to go to court. I'm assuming, right? It wasn't just the bank was like, hey, they had to go to court and they had to get some type of documentation. I'm assuming to prove that they're doing this and they could afford the payment, or they should be paying it, but they're not paying it.
Exactly. That's exactly what it is. Even if they had lost their job and nobody was sick with COVID, everybody tested negative for COVID, and the person lost their job, you can still file an eviction for non-payment because technically they have a lease in place. But like you said, you're going to have all your things in order to present it in front of the judge, right? You have to have a lease agreement in place. So that way the landlord, you can present that in front of the judge, tell the judge, look, they're not paying, they're non-payment, see what the judge says, and they can still file for the eviction. But it also goes back to the homeowners in forbearance.
Yeah.
The same type of action that they have to take, they have to communicate with the bank also. So if they're not communicating with their bank, they're in notice of default. They're in a situation where they could be foreclosed on, when all they have to do is pick up the phone, call their bank and say, look, we're in a situation, we need some help here, modification. And there's a lot of different options that they can take, but it's all about taking that action and giving them a call.
I think too, I mean, if you look at it, I think it's people that are in delinquent status. It's because they want to be in delinquent status. Like, I'm not saying that
playing the system.
Well, let's go back to it. If you need the system, right? It's like people that are, I hate to say it, but like on food stamps or something. Like, if you need it, you need it. We get it. But do you want to just use that as a crutch for the rest of your life? I don't know. That's a decision making right there for your life. And I think it comes down to where we're at today and where the situation's at. Do you have jobs out there? Is there more than enough jobs out there for people to go and get one? I heard over, through the grapevine here in Las Vegas, there's 2 jobs for every unemployed person. Now, I don't know what the unemployment rate is right now currently. I'm sure it's pretty low. But who knows? I mean, is it an excuse? It all comes down to a case by case. But I just think that, hopefully this thing, I don't think it's going to be like it was, though, back in 5, 6, and 7, where there was we flooded the market of foreclosures.
Oh, man.
I know you would love that, because then that would really even the playing field for everybody. And I think it would open up obviously more properties. And guess what? These prices would come down.
David Hong says, do you believe there will be another extension for the eviction moratorium?
No, not the eviction, because the eviction is done. May 30th, the eviction moratorium was final. So the next step, right, is the mortgage moratorium. So that one is June 30th. And based on what we've seen, the final extension was already given. We've seen now the eviction moratorium go through and be finalized. So there's no reason to believe that the mortgage moratorium is going to be extended any further than June 30th.
Now, let's talk about this for the rental properties. Think about this. Now, if all the landlords go out, hire an attorney, right, it goes through the court system, how long is that also going to take, right, to evict people?
Well, like I was telling him, there's a judicial process to all this. There's not just you can just go down there and evict people, or you go down there and it goes through this process. The bank, you got to prove that the bank you owe money to the bank. The bank's got to foreclose. This takes time. It takes money for the bank to do it. It's not like a simple, hey, right on that date, you're out. It's like now it's probably months after that before they even start that process of getting you out. And they probably don't want to get you out. It probably costs them more money to have somebody foreclose and get the property reset.
Yes. Well, there's a couple things that you can do. Number one, you could just get foreclosed on, but why would you do that? And typically before somebody does get foreclosed, they will do a short sale. And basically, what is a short sale, David?
Short sale is when you owe more than what the house is worth. And that's going to be extremely difficult in this market because the values are going up so high. There's probably, less than 10% of the economy that's going to be short.
Yeah.
That their home value is lower than their mortgage.
Now, the other thing that you could also do is what is that? Deed in lieu. And what is a deed in lieu?
Deed in lieu is where you can transfer the deed, right, to another buyer.
Yeah.
So that's another option. A lot of families can do that if they're in that place, or another investor, right, a cash investor.
That is correct. Or if you can't make payments no longer, you can just give it back to the bank without
It's giving it back to the bank
Yes.
without any covenants. It doesn't keep you from getting any covenant, like protecting you from any covenants. So the difference is the bank doesn't really. It's like the bank doesn't really win as much on that type of situation, but they still take the property back.
Yes.
It's almost like the client or the person that owns the house saying, hey, I can't make this payment. I'll just give it back to you in a deed in lieu.
And now, when you do a short sale or a deed in lieu, that does affect your credit. And based upon the type of loan that you have, and correct me if I'm wrong, Dan, right now, depending on the guidelines, you may not be able to get a home right away, right?
No, I mean, you can under certain criteria. Look, everybody out there, it's about risk and profit. If you really wanted to get into something, you got hard money, you got all kinds of stuff. Now, on a traditional style loan, you got to wait some time. You got to get that slap on the wrist. Unfortunately, that's what it is. But if you want to take alternate routes, get a higher rate, spend a ton of money, put a huge down payment, you take all the risk, they win, basically, then you can. I mean, it just depends what your situation is.
Okay. Well, I'm going to count to 3. What we're going to do is we got a super chat from Cece. And she's got showing the love. Oh, what is this? Showing love to my favorite real estate channel. So we're gonna give a quick shout out to Cece in 3, 2, 1. Yeah, baby!
Shout out to Cece.
Thank you so much, Cece. Appreciate it. The super chat.
I'm gonna do 2 C's. How do you do that? CC.
I'll be like CC or CC.
There you go.
CC.
CC.
Thank you so much, CC. We do appreciate the love and the support. Okay, let's see what else we have. Here's a question from Michael. Michael says, what's the availability of standing inventory homes in today's market? And what are the pros and cons of buying a standing inventory home? Does this still exist? I'm not too sure I'm not understanding the question, but it sounds like how much homes do we currently have in today's market? So if we take a look, how many homes we currently have today as far as active, single-family residence, detached, not including condos, townhomes, duplex, triplex, fourplexes, and high-rise, just detached homes, 2,221 homes. Now, if we take a look at the rental side, we have a total of 951. That's 50% of today's market. But remember, the average days in the market right now is actually 6 days. The inventory is almost less than a month's supply. So basically what this means to you is that if no homes went on the market today, right, within 30 days, no more homes. Isn't that crazy from where we were when we had over 18,000?
Yeah, but that was at
properties?
its peak. But
I know.
To answer his question, the question is it a good time to buy in this market, and is it a better deal? I think is what he's asking. Is it still a good deal?
Versus new?
Yeah, versus new, versus existing.
You could be right. That makes sense.
So I think existing, you still probably get more bang for your buck, right? I mean, you still get a little bit more because it's not buying new. We all know that the new home builders are transferring a lot of that cost of materials that everybody knows is skyrocketing to the consumer out there. So I think you still get a better deal, even though you still might pay a little bit more. Sellers know they're trying to make a mint off of their money too on their houses, right? What they're selling it for.
I think it's just very simple. All you got to do is find out what the square footage is, and you just divide it by the price. Figure out what you're paying price per square foot. That tells you if it's a better buy or not. So now you're comparing apples to apples. That's the best way to do it.
Is that consistent though in this market with sellers thinking that, like I said, they hit the lottery where you just got a ton of properties, or not a ton of properties, but you get properties in the market they're selling way above list. So it's almost like this. Am I getting a good deal if I buy it at that price, or what is the final price? Like if I said, hey, I'm going to buy it $40,000 above what that list price is.
Yeah.
Now you got to actually divide it by that price because that's what you're buying it for, right?
No, you're absolutely right.
The list price isn't technically the starting point. It has to be what's the final number.
Mm-hmm.
And I think kind of dissecting more into that question is we have standing inventory as far as builders go. And what that means is we had a cancellation during the process, right? They have a 6 to 8 month building process. And if somebody cancels during that time, that property goes back into the mix as standing inventory. So in that case, you could possibly get a better deal because the seller has already picked out the flooring, the colors, a lot of the things in the property.
Oh, yeah.
So you have to go in 3 months into the construction process and be okay with all the colors that they chose and pick up the property, as a standing inventory. So that's another point.
Somebody says, is Chakits drunk? The rental rates are through the roof. I'm not saying it's not through the roof. What I'm saying is that it's $1,700 across the board. What I'm trying to explain to you guys is that if you compare the rental rates, right, as far as you getting a loan, are you going to make money at the same type of home with a mortgage? No, you're not. You're going to be negative equity. This has nothing to do with is $1,700 high or low. So I got to chin check you for a second. And also, it depends on the market. We're only talking about Las Vegas right now.
Yeah. And so going over what you were saying, David, about the situation with a lot of these properties and investment properties, do you see that obviously they're going to start to go down where you're going to see these properties? Because we talked about this before, where there's more properties coming on the market. Is there going to be, when is this going to start? When is this going to happen when we start to see the market kind of open up? I think everybody's waiting for that. So
yeah, exactly. I think that's the number one question, right? A lot of investors are on the sideline with a ton of cash ready to buy properties. A lot of primary homeowners are ready to buy properties for their family to live in. So in my opinion, what I'm seeing is going to take a process, right? It's going to be.
How do you think that's going to unfold, I guess, is what I'm asking.
Yeah, I think so June 30th, the moratorium is going to be finalized. Once that happens, starting July, the court systems can now start, or the banks can now start the process of foreclosure,
right?
Notice of defaults, sending out letters, negotiating modifications. And during that process, it takes anywhere from 6 to 9 months to actually foreclose on somebody in a normal market, right? We're not in a normal market.
Not a normal market,
It could take 12 months.
Yep.
But for example, we have, 12 million throughout the country that are in a forbearance program. So here in Las Vegas, what are the numbers here? How many in forbearance in Las Vegas?
That I don't know exactly. So
a few 100,000, I would guess.
Yeah,
right?
that's what I'm thinking.
So out of those people there, they're going to have to negotiate with the bank, find out if they can modify the loans. And if they can't modify the loans, put everything back on the back of the principal and then start their payment back over so they can continue paying on the property. And there's going to be a big percentage of people that are still unemployed and can't pay. That percentage is going to hit the market, but it's going to take 6 to 12 months, I believe. So starting from July, we're not going to see that inventory until maybe January, February at the starting point, start to trickle in.
I mean, we're here in Vegas, right?
You make a good point, man.
Yeah, it is. And let me say this. Is it now the time to start worrying about buying a home again? We had this issue back in 5, 6, and 7, crashed. Everybody's like, let's be honest. If everybody took their money out and put it into a house at that point, everybody I talked to was like, I'm not putting my money into a housing market because it crashed. And, and it's not a good investment, this and that. And then now we see it increasing significantly. Are people out there starting to get worried about, is now the wrong time to buy? And I think that's where the big statement's at. Like, when do we buy? And the average person here in Las Vegas, can they really buy these homes anymore? If
Well, that's what I'm saying. It's the median price point is, I mean, the average household income is only $51,000.
Yeah.
It's already 8 times the income. It's like you can't even afford to buy a home in today's market. So us locals, we can't even get into a home. You know what I'm saying? I feel like that time has passed. So now we are heading into the rental market, which is, like this guy said, the rental market has gone up. Right, which is true. If you went out to rent a home, $1,700 a month is very expensive. However, my point that I was trying to make across again is, if you're buying an investment property at $400,000, making $1,700, you're making no cash flow because your monthly payments are $2,500 to $2,700
so you're looking at
a month.
You're talking about from an investment standpoint,
Yes.
not really about a renter standpoint.
Correct.
Right, so that's the difference. I think what we're talking about is just rents going up in general. But as an investor, is it a good time to buy with what your return on investment?
No, the answer is no to that. So I just want to make that clear.
Yep.
What else do we have on financing, Dan?
Let's talk
talk about some financing.
Let's talk about financing. All right, so let's rates have 3-month lows, and they've gotten better. So I have a huge influx. It's just like I said, man, as rates go, And as the bond market goes, that's what you're going to see confidence in. And you look at these investors, big hedge fund investors, everybody's talking about inflation. Yes, it's something to look at, right? I don't think, though, that we're going to go into inflation where it's going to go out too crazy, because the Fed has figured this out. The big thing that they do is they just raise interest rates. Now, the Fed's fund rate is at 0. Talked about this before. Rates this past week are flat. So overall, we're still at 3-month lows. But when you look at the inflation situation and you look at what the bond situation is, if hedge fund investors and big investors had a problem with it, you look at the 10-year yield right now. We went from, I believe it was 1.8 down to 1.69. I think it's about 16 basis points. If the whole purpose of that is if the investors were thinking that they were going to have issues with inflation, remember that affects all kinds of businesses. It affects everybody extending credit. Then they would be, pulling back or retracting. They're not doing that. It's steady as it goes. And so obviously if it's bad news in the markets, bad news out there in general, that's good news for mortgage rates and good news for bonds. So what it's saying is that investors don't feel that there's not going to be a change in interest rates. There's not going to be a change in inflation. And they don't see any risks at all as far as investing their money and keeping it the same. A lot of times these big investors, they retract. They pull the money out of some of these stocks, all-time highs, right? Stocks are all-time highs. So we're not seeing any negative data, any negative news. So as inflation is going, I don't feel, even if it did go up a little bit, we do see things are starting to go up. But even if it went up a little bit, I think it's temporary, because we're feeling the effects of COVID and what's happened with COVID, and now everybody's going back. I have people that are in industries, sheet metal. That's one of them, right? Record numbers, right? And people, they can't get enough people to work. People don't want to come back to work because they're still on unemployment. They can't get enough people to work. And they're getting just record amounts of orders and just different things happening with different businesses. So you're seeing a huge influx in a little bit right here in a short window of inflation, but I think it's going to come back and it's going to retract. Also, the Fed, like I talked about, the Fed's fund rate is at 0. They're not going to raise this thing until probably 2023. So
probably because they can.
Well, they can, but they want to also manipulate the markets, and they figured out how to do that. If you got rates, mortgage rates is a good way to manipulate what's going to happen with markets. Everybody's saying, well, hyperinflation is going to happen. And it could, but yet there's still the Fed still buying bonds.
Okay, well, let me ask you this.
Sure.
Are you saying that right now we don't have inflation?
I'm saying temporarily we do. If you're saying
have you looked at food costs, gas, like all this stuff, material supply?
Yes. But they also take that in consideration. That 2% barometer is something they always pay attention to, and there's a way to manipulate that.
Well, they are, because according to core CPI, they do not account food,
correct,
gas, and all essentials
I think
daily
that's
life.
Core expenditure, core CPE, I think is what it is.
Is that what it was?
I think so. It's consumer, I don't know what the name of it is. It's consumer expenditures. Basically
all I'm saying is when you look at the data, you really have to take a look to see what's included, because now what the Feds are starting to do is they start taking things out of there that is not included into the equation.
Right, but even if the inflation started to happen, and the data that I've been seeing, there is manipulation of how to correct that or maybe tame that.
By printing more money.
Well, sometimes they print more money, or sometimes they retract the money. Sometimes they pull the money out of circulation, and it's a balancing act, and we talked about that. So if you look at mortgage rates, they're not going to do anything anytime crazy. People are refinancing. Obviously, these 3 months lows are big. We're looking at, you look at why people are staying in their homes longer, right? So you look at, that's another reason why people are not moving, and they're staying where it's affordable. You got baby boomers staying in their home, 7 to 10 years now. So there's a lot of things happening that are behind the scenes that people don't know, but yet there's still concern.
Yeah.
But again, the Fed's going to come in and do something about it, or try to correct it before it becomes an issue.
Now, let me correct you here, because it says right here that the annual inflation rate in the U.S. had soared to 4.2% in April of 2021 from 2.6% in March.
It's not saying that it's not there. I just said it's a short window. It's going to be like this for a few months.
Yeah.
And it's because everybody was not working. There was no orders. Now every business is backed up. Every business is they're trying to get the goods and services out to people, and the costs, and you got orders, and just things are just backed up like crazy. So
So what you're saying was once things kind of
Settle
pan
down.
out, settle like what you're
Correct.
saying, and we have more supply, things are going to come back
Slowly.
to a lower
still
cost.
we'll still have inflation, and it's okay. See, the Fed, if it was a normal market, we probably would go crazy on inflation. We probably would go real high, right? But we can't do that all at once. It can't go from 0 to 100. So what I'm saying is, yes, it's going to be temporarily. It's going to be high. You look at the cost for the builders, materials, everything up crazy, right? Same thing with, I said, business owners up crazy. They got tons of orders they can't get out. But what's going to happen is that slowly towards the end of the year, I think things are going to start to get back to normal where, yes, inflation's still going to be there, but it's still not going to go as quick and as crazy it is right now. And
So do you think the hyperinflation that we're in now, the temporary market, are we at the tail end of that? Or are we in the middle of it?
I think it's just started, but I don't think it's going to go to a hyperinflation. I think
we're here to stay.
I don't think so. I think it's the fact that, and I'm going to tell you again, the Fed can manipulate this with how they deal with rates, right? If they wanted to raise rates, they could do it today. Raise the Fed's fund rate. Boom. Now the cost to everybody, including banks that they extend credit to everybody else, they can do that. There's a reason they're keeping it zero. There's a reason they're keeping bond prices and buying bonds.
So that's going to shorten the pool, the buyer pool, right? So you extend it out, and then now that opens up the buyer pool, and then you retract it. Now you have hundreds of thousands of people that can no longer afford to buy a house because the DTI, debt to income ratios are lower.
Absolutely.
And it shortens the pool.
But they still look at that stuff, right? And it's all going to be coming off of consumer confidence, but it's the data that they see. It's how look, why is everybody spending money right now? Look, everybody's getting stimulus checks and spending money, right?
Zach is pretty funny. He says, so the U.S. GDP is like $13 trillion, which is technically more than that because they do not count Social Security. So we're more in debt. So keep that in mind. Also, it says the chief Dumbo, which is, I think he's referring to our president, wants to add another $6 trillion to already high
That's not
debt.
going to help us at all. Not at all.
So that's my point that I'm trying to make here, Dan, is that inflation is here and it's here to stay. We're not going backwards.
It's never going to go away. I'm just saying it's not going to go to hyperinflation, and that's what I'm trying to say. They can't let it go to hyperinflation right now.
But if you look at food costs, gas pricing, we're up like 30%. If you look like at milk,
temporarily,
cheese,
let's see what happens towards the end of the year. We'll just see.
I got you. I mean, here's the thing, and that's what I like about this show. We're not all on the same page.
Right.
It's all about the debate, right?
It's going to come down to the administration. What do they do? If they put more taxes, that's not going to be good for everybody, right? But we have to see what their plan is and see how this thing unfolds, because then we can look back and say, yeah, this is the effect of this.
So the reason why you're saying we have inflation is because we're printing more money. There's a lot of people that have absorbent amount of money. They're going out, they're spending money. Then the manufacturers and the suppliers can't supply it fast enough, so they're charging more money.
Well, they're charging more, and plus they have so many orders because everybody wants it all at once. It's like it's like a dam. So everybody needs something all at one time, and the costs and the deliveries and everything, you can't supply it all.
And I get that, but what's going to happen when the money supply starts to flatten out? Okay, hyperinflation or inflation that we currently have today is not going to drop.
What they'll do is they'll retract some of the dollars in circulation and raise interest rates. And that will
hyperinflation.
No, that will pull everybody back. It will pull everybody back. And I'm telling you, that's how they manipulate it. I'm telling you right now. And there's a reason they're keeping the Fed's fund rate until 2023. There's a reason behind it. They're going to manipulate what the inflation rate is. They cannot go above or they don't really want to cross 2%. We all know that. How long has it been 2%? How long have they been dealing with 2% inflation?
Well, they have to, because they have to keep it at a fair balance.
You just answered it. There you go.
Look, the Feds can only kick the can down the street for so long. It's going to be a cold winter.
So everybody thinks the costs are going up. Yes, they will. And they're going to continue to be
up. Well, cost is already up. Let's clarify that.
Yes, we'll see where it ends up. Correct. We'll see where it ends up at the end of this year.
I guarantee you they ain't going backwards.
We'll see.
David?
I mean, that's just yet to be determined. I mean, there's two sides of the aisle here, and it's just really hard to say. But I would say that they're going to plateau.
There's three sides of the coin. Dan is the tails, I'm the heads, and David is on the corner.
Right,
he's on the side.
David
lands on the side.
Somebody says here, of course, more taxes are to come unless there's another .com like boom. Maybe we'll have to see. Now, when we talk about that, I guess .com boom, I mean, obviously that's never going to happen again. The only dot-com boom that's taking place right now is probably like the Bitcoin and all that kind of stuff that's taking place.
That's even regressing though. I mean, it's just everything goes in cycles.
Yeah.
And it's funny because everybody says, well, Bitcoin's the savior. And I think that Bitcoin's definitely something to look at to invest your money. So don't say I'm not saying, but it's just somebody comes out and says something and it changes all the direction of where it was going. It was just going crazy at one point. So it's just interesting to see. I mean, it's hard to know exactly what to do, but like you say, all markets are inflated. Everybody's trying to figure out how to make that money. A lot of people are looking at how to make quick money or the most efficient money or return on investment, the highest amount. It's hard. You know,
from what I've been hearing is, we had a crash in 2008. We had a bubble, we had hyperinflation, and we had a real estate crash because of bad loans. Yeah. Adjustable rate mortgages, bad loans, 100% financing, a lot of financing out there. From what I'm hearing in this market, we have a lot of cash buyers, huge amount of inventory that's being purchased cash, good loans that are being done. So what we're seeing in this market is what we might have is a stock market crash because of inflation.
We had a recession. People don't think we had a recession. Don't you think that what we went through right now with COVID was a recession?
I want to say yes, because
economically it was.
Yeah, because
just not in the housing market here.
I believe a recession consists of 90 days,
Correct.
Right? So yes, it would actually be a recession. Now, Howard makes a good point, and this actually affects the housing market, believe it or not, the geopolitical events. Howard says, we also have to talk about the geopolitical events. China and the U.S. aren't getting along with Russia or anyone. That does play a big part.
Well, it plays a big part, but does it play a big part in investments, right? In hedge fund investors?
Eventually it does.
So like if there's negative news, like let's say we went to war or Brexit or something, something big where they we cut off the chain supply, just like when we had with the tariff, right, with China. That's big because it affects how people are thinking, well, should I invest my money into this because of this outcome with China, right? And so now some of these investors retract and things happen and things change. But I think you got to say that on a big scale, what is the outcome? How is it going to affect us, I guess, is the question. Because
I think the media has a big pull on consumer confidence, right?
All right.
So we go back to that, and it's, they can manipulate the market by having certain stories come out in the media, and that's going to affect the consumer confidence.
100%. It's just like with Elon Musk, right? Came out with about cryptocurrency.
Yeah, and that affected the Bitcoin.
Boom.
What else we got for financing?
That's it, man. Like I said, refinances are up.
What are the rates on a 15-year?
It depends. I mean, it depends on credit, but I would say it's hovering right around 2.5, maybe a little bit lower. It just depends on credit score. Like a lot of people, when they get into a deal, they're looking at, well, I see this online, but you can't base that off that. There's other layers, there's other factors, there's compensating factors. The bank is going to look at the risk and the profit, obviously, as you as a consumer. They're not going to just, so we have to look at the whole picture, but, case by case.
Oh, thank you so much, Mark Minnie. If I just bought my house at $250,000 and it's currently $510K, where are we going to peak before we crash? This is unstable. How many years before the peak? Answer that question. I don't know. We'll have to wait and see. But hey, I just want to give a quick shout out to Mark for donating Super Chat $5. You are the man.
Big Mark.
That's right. I really do appreciate it. And guys, thank you so much for tuning in to the LV Home Experts Radio Show every Wednesday at 5 p.m. Pacific Standard Time. If you guys haven't had a chance to subscribe to the channel, go ahead and click that subscribe button. Also, check us out on Instagram with daily vlogs. All right, well, thank you so much and have a blessed day.